The next point, what are the factors upon which the form, content, and extent of audit documentation is dependent? So this question is basically talking about how much do you need to document, or what is the size of your, what is the size of your documentation, or how robust does it have to be? Let's say if it's a very small entity and it has just 2 or 3 expenses, your audit documentation is not going to be so comprehensive. It's going to be very limited to the testing of those 3 4 expenses to whatever little revenue that the company has. Maybe it has few assets, few liabilities. So your audit documentation, your audit file itself is going to be much smaller. Vis-a-vis, compare that to a listed company which has a lot of subsidiaries, a lot of associate companies. It's going to be much more robust because you need to do a lot more checks. Because it's a listed company, there are a lot of regulations that apply as against a private company. There are a lot of reporting requirements, so you need to ensure that you're complying with all of them, and that is why the audit file is going to be much more larger and much more robust when you're auditing a listed company. So let's see what are the factors that will determine what the form, content, and extent of audit documentation will be. The first factor is the size and complexity of the entity. What does size mean? Size could be a public, a private, a listed company. You could also have a startup company. A startup company may just be at a very nascent stage of its operation, so it may have a huge cash balance because it's been funded recently, but not a lot of profits. It could have some revenues, a lot of expenses. Revenues could still be at a very nascent initial stage. Expenses would be a lot. So for a startup, it's going to be, let's say, a little bit lesser. The risks are higher in a startup, so you'll have to check. The risk of material misstatement could be higher for a startup, so you'll have to consider those factors. These are all considerations. There is no one size fits all. Nobody can answer that for you. It has to be your professional judgment that decides what is going to be, how your audit documentation is going to be, and how much do you need to check, and how much do you need to, what all of that you need to document, what is significant, what is insignificant. So this is just kind of a guiding checklist that tells you what are the factors that audit documentation, the form, content could depend upon. So size we've discussed. Complexity could be, let's say, the company has a lot of subsidiaries, a lot of associates. Then you would need more audit documentation because you need to understand the entire organization structure of the company. You need to perform audit procedures for the subsidiaries also. If, let's say, if you're the auditor of the subsidiary, then you'll be auditing them as well. Or if you're a group auditor where you're the auditor of only the holding company, and let's say the subsidiaries are being audited by someone else, so you will send out group audit instructions, you will have discussions with the subsidiary auditors. So those things, those complexities will increase, the extent, the content of your audit documentation. Also, you could have banks, you could have NBFCs, which are regulated industries. You have RBI regulations, insurance companies, you have the IRDA regulations. So those things also make it more challenging because you have to ensure that the financial statements, that the operations, everything that the bank is doing is in compliance with the regulation. So the complexity, the size will determine how much has your audit documentation to be. Next is the nature of audit procedures to be performed. So this could be like, for example, if you're testing the expenses of a company, you're checking the expenses, then you could have, let's say, audit fees. And audit fees, you will just check 100% because it's just going to be a single number. Let's say you're being paid 5 lakhs for the audit. So the audit fee expense has to be 5 lakh plus some number which is your out of pocket expenses. So the nature of the audit procedure to be performed, that will also determine what is the size of your audit documentation. You could have rent, electricity bills, where you may just check 2 or 3 months bills to ensure that the expense is not materially misstated. Or you could have legal professional expenses where you may delve much deeper to identify if there are any litigations that the company is facing. Why is the company making legal payments? That is a very important procedure also. So the nature of the audit procedures will also determine will also have an impact on the audit documentation. The third point is the identified risks of material misstatement. Again, a very significant determinant, because let's say you have a lot of accounts with a higher risk of material misstatement, you will have to perform more work. Whereas, let's say you have a lot of accounts with a lower risk of material misstatement, you will have to do lesser work, relatively lesser work. So, more the risk of material misstatement, more the work, lesser the risk, lesser the work. Okay, the next thing is the significance of the audit evidence obtained. This, if I had to explain in very simple terms, this would mean that higher the quality of the audit evidence that you are obtaining, lesser the amount of other work that you need to do. Like, let's say you've got your cash and bank account, you've got your bank account balances. Let's say the company has 3 bank accounts, and if you send out external confirmations to the banks, and you get their independent responses. So, once you've got those independent responses, you don't need to do any other work. And we're also assuming the bank reconciliation has no open reconciling items. So then there's no other work needed to be performed. But let's say the bank does not respond to your confirmation requests. So then, you will have to maybe get the bank statements. You may have to look at going to the bank physically and getting a confirmation. Maybe that doesn't work out. So, it all depends on the significance of the audit evidence obtained. Let's say, another case could be where, you're testing your expenses balance, and you've got an entry where, let's say, the expense amount is 10,000, but you look at the invoice and it says 5,000. So, your amount is not tallying. So you will have to ask more questions. You may have to look at more samples. You will have to dive deeper into why is there a difference, why is there a discrepancy between the balance in the books versus the actual invoice that you've seen. So also the significance of the audit evidence obtained will also have an important impact on the documentation. Now the next thing is the need to document a conclusion or the basis for a conclusion not readily determinable from the audit documentation of the work performed or audit evidence obtained. We'll just read this again. This is a bit of a confusing point. The need to document a conclusion or the basis for a conclusion not readily determinable from the audit documentation of the work performed or audit evidence obtained. So let's say there is a particular area and you've documented the audit evidence that you've obtained, and also whatever work you've performed, you've documented that. But still, somebody who's reading that may not be able to infer how have you reached the conclusion based on the work that you've documented here. So maybe there may be an element of professional judgment that you've applied over here. So that professional judgment, and how have you applied the professional judgment, and how have you reached your conclusion, you'll need to also document that also. That will also become very important over here. Okay. Then the next thing, the audit methodology and tools used. Now, audit methodology could be the standards on auditing, could be the international standards on auditing if you're doing an international engagement. If you're doing a USA based engagement, you could have the AICPA standards, or you could have the PCAOB standards. And with respect to the tools used, you could have computer assisted auditing techniques. You could have audit sampling that you have used. You could have Power BI tools prepared. You could have different tools that you've used to aid your audit procedures, and whatever tools you've used, you will also have to bring them into your documentation as to where you've used them, how you've used them, and how have you looked at the outputs that you generated from the tools that you've used. Okay. The next question is on examples of audit documentation. So what all could form a part of your audit documentation? There's also an image below the answer, which is nothing but the same thing actually, just in a pictorial format. Now, the first point here, examples of audit documentation, is audit programs. Audit programs is nothing but your various work steps. You could have the planning phase in your audit. You could have the risk assessment phase in your audit, the testing phase, and the conclusion phase. Actually, these 4 are the main phases in any audit. So you will have to document what you've done along every phase and the work steps that you've done in every phase. You'll have to bring that in your audit documentation. Now, next thing is analysis. Now, analysis could be one form of analysis could be your substantive analytical procedures that you do. And substantive analytical procedures could be, let's say you've taken the current year numbers, the current year financial statement numbers, and compared that with the previous year numbers. and you're trying to identify if there are any significant variances, and if those variances indicate any kind of unusual movements. You're just trying to see that, okay, let's say everything has grown at a rate of 10%, then that's fine. But let's say everything is growing at 5% and something has just grown at 50%. Maybe that you need to investigate that. You need to check that why has that balance moved so significantly up, or something has gone significantly down. So why has that gone significantly down? So those kind of analysis. For payroll, maybe you look at the monthly payout that has happened. You'll kind of build an expectation. Let's say every month the company is paying salaries worth 80 lakhs. So in payroll, it usually has to be the same number month on month, adjusted for any joiners and exits that you have. So you will kind of try to build an expectation and check that month on month there is no significant deviations or variances in the payroll amount that has been paid out. You could also do a revenue versus expenditure movement. Let's say the revenue is growing at a rate of 10%. Expenses also should more or less grow at the same rate. You could also have analysis drawn between the capital expenditure and the growth of the company. This is actually more of a different and a more advanced concept, in the sense that, let's say, a company is incurring more and more capital expenditure. So any company that's actually incurring a lot of capital expenditure, there will be a lot of cash outflows in the company. That's not a bad thing, because a company will incur capital expenditure for future growth. So you will also try to see that how much is the capital expenditure that the company is incurring contributing towards an increased revenue. Capital expenditure should ideally be contributing towards more and more revenue for the company. If the capital expenditure especially is increasing year on year, you should also be able to see that the revenues are increasing year on year. And if there is no increase in revenues year on year, you may want to discuss the reasons for why there is no increase in revenue. Is the company making capital expenditures in incorrect places? Is the company not strategically thinking where it needs to spend? Or is there some other reason altogether? You may want to check that. So analysis can be extremely helpful. The next point is issues memoranda. So you have this, actually, this is a part of this chapter only. You have a completion memorandum that is suggested by SA 230 that companies should prepare, especially for listed companies. For complex entities, actually, SA 230 prescribes preparing an issues memorandum. So that should also form part of your audit documentation. Then the fourth point is summaries of significant matters. This you've seen several times. Then letters of confirmations. So this, the fifth and the sixth point, if you see in the image also, it's actually mentioned within one line, but I've just separated it. Letters of confirmation is governed by SA 505. Which could be your bank confirmations, your investments confirmations, your debtors confirmations. You could have various forms of you could have legal confirmations, you could have RPT balances confirmations. So all of these confirmations also need to be documented within your audit file. Then letter of representation, you have your written representation that is governed by SA 580, which is a mandatory document that you have to take from the management. Then the seventh point is checklist. Now, what are checklists? You could have checklists on standards on auditing. You could have checklists on accounting standards. Checklists are basically a summary of all the steps that, like, let's say if you have a checklist on SA 230 itself. So it will just list out all the important things that SA 230 has stated you must do. So you can just go through that checklist and just tick whether you've done it or whether it's not applicable. And if you've missed something, that checklist will just serve as a reminder that, okay, you need to do this also, and then you'll realize you missed it, so you need to cover that as well. So you could have checklists for standards on auditing, you could have checklists for accounting standards, you could have checklists for related party transactions, then company law, SEBI, LODR. You could have a lot of checklists. The last point is correspondences, including email concerning the significant matters. Now, usually companies will have regulatory correspondences with the MCA, for Companies Act related matters, or with SEBI correspondences. With different regulatory authorities, they would have correspondences, and you will, as an auditor, need to, first of all, how we do it actually is we take a list of all the correspondences from the management, and then we just go through the list to identify, okay, what looks like a critical matter, what looks like this might have something that is important for me to understand more about the entity, or I want to know more about this matter or this correspondence that has happened. So you kind of tell the client, tell the management that, okay, I want to look at these 20 correspondences, and those correspondences which you believe are significant, you need to also document within your working file. So also these are examples of audit documentation. So this is not an exhaustive list. You could have many more things in audit documentations, but this is kind of an illustrative list that has been provided by SA 230. Okay, now coming below the table, the auditor may include copies of the entity's records, example, significant revenue contracts as part of his audit documentation. Audit documentation is not a substitute for the entity's accounting records. Very important. This can also come in some MCQ or some kind of correct, incorrect question. Management cannot claim that the auditor's work papers are a substitute for the accounting records of the company. No, audit documentation is a property of the auditor. It in no way belongs to the company. Even though you use audit evidence, even though your audit evidence will actually contain records of the company's invoices, agreements, important confidential information, some kind of plans, proposed terms, all of that. But all of that is a property of the auditor. Management cannot claim it as theirs. Audit documentation is not a substitute for the entity's accounting records. Next part, timely preparation of audit documentation. This is actually very important practically. The summary of this timely preparation, you've got a 5-line paragraph here. The summary of this entire paragraph is you need to document on a live basis. When you are doing an audit live, when you're doing an audit actually on a daily basis, and if you document it at that point only, let's say you do a lot of audit work during the day, at the end of the day, let's say you take out 2 hours to document whatever you've done on that day, everything's very fresh in your mind, and you're also going to be able to retain all the minor nuances in your work paper. The minor details will also get captured in your work papers, as opposed to, let's say you audit today and after 2 weeks you sit to document it. You're going to have a tough time recalling what all you had checked. You are going to have a tough time recalling the minor details that you have checked. It's going to be a lot of pressure, unnecessary pressure on your mind to kind of recall everything, which would have been so fresh had you done the documentation on that day itself. And that is why the standard calls for a timely preparation of audit documentation. Very, very critical, especially practically. Now let's just read the paragraph here. The auditor should prepare audit documentation on a timely basis. Audit documentation prepared on a timely basis helps to enhance the quality of the audit and facilitates the effective review and evaluation of the audit evidence obtained and conclusions reached before the auditor's report if finalized. Documentation prepared after the audit work has been performed is likely to be less accurate than documentation prepared at the time such work is performed. So again, the second point also, if you see, when you're doing timely documentation, that is also going to help effective review. The checker will be able to review whatever has been prepared by you. But if you don't have documentation that's ready, if you have some kind of rough working paper that you've prepared, or you're just kind of having verbal discussions and not anything written down on paper or on Excel, what the way you're documenting it, that's not going to be helpful for conducting an effective review. The review is not going to be very effective, and that is why timely documentation is very important, because it will just help enhance the entire quality of the audit documentation, the audit file, and it will also help in effective review of the audit documentation. Now, audit file. Now, audit file and audit documentation, some might, tend to get confused. Audit documentation is basically, like we said, you have interchangeable terms. Sometimes it's called audit working papers. Sometimes it's called audit work papers, WP, that we discussed right at the start. So you will have an audit documentation or work paper for each financial statement area. Let's say for revenue, for other income, for expenses. Expenses, you may have employee benefit expenses work paper. You may have another expenses work paper, a finance cost, a depreciation, a COGS work paper. You will have individual work papers for every audit area. All of these work papers are combined into one file, and that file is called the audit file. You know, in the Big Four, we call it a engagement file. That's how we call it. So a file basically contains the audit documentation for each area of the financial statement. That's how we define it. Let's just read the actual definition from the standard. Audit file may be defined as one or more folders or other storage media in physical or electronic form. So how you usually have it is it's in an electronic form. You have this one engagement file that you create, and within that you put in against each financial statement area, you will put in that, okay, this is my work paper for this, for let's say property, plant equipment, for revenue, for expenses. You will put in your individual work papers in the electronic format in the audit file. So in physical or electronic format containing the records that comprise the audit documentation for a specific engagement. So for every specific engagement, you will have a separate file. Let's say you are doing the audit of ITC for March 2024. So you will have a March 2024 ITC statutory audit engagement file. Let's say you're doing the tax audit. So you'll have a March 2024 audit, tax audit ITC engagement file. So for each separate engagement, you will have one audit file.